Solana on a weekly time frame.
Shavyfxhub. So we are waiting a weekly breakout from this level. So let me throw some structural explanation into this a weekly SR. The 2 weekly SR, the break of SR, price returns here as ROS. And we have two ROS giving us an ascending trend line, ATL. And the entire here became a demand floor. And we had a break of SRO level from here. And that returns price to ROS. Making here your supply roof. So if
Solana breaks down from here, from where it is right now, if it breaks out from where it is right now on a weekly time frame, and that's a weekly close, then Solana will most likely retest this floor again. My preferred demand floor on a descending trend line. Very beautiful price action surrounding this level. Very beautiful price action. So let's look at the price action from line chart perspective. You see price create here, demand floor, break of structure, retail supply, create a descending trend line. Without those two price action, you can't make this out. That's very impossible. So that's a DTL, descending trend line. So the secret is that the market will first of all create structure. That's the secret, DTL. So that means you are not permitted to trade until the market creates a structure. What you are trading is the structure of the market, the sentiment of the market. You are trading structure and sentiment at the moment. Is the market buying? Even if it's buying, what did he do in the past? So you must marry what the market is doing presently with what it has done in the past. They must align. They must align. So you see a whole lot of grammars in the market. I don't believe in too many grammar. So now we have another beautiful cross at this level. Very beautiful. You can see it on your line chart. We have here as a support structure, break of a support structure, retest, give you an ascending trend line, ATL. So the market must first of all create structure. Is an RS. And price after break of that structure came here, retested it as an SR again with a heavy weekly candle rejection at this level, making here another supply roof. And after testing that level, we have here a double top structure. Price came back and the leverage on that double top neckline, a broken neckline using this data. The trend line at this level was what the market reacted on. So I'm going to stop that. I don't want it to extend beyond here. The reason is because nothing lasts forever in trading. Whatever you leverage on, every trend line you leverage on, 1, 2, 3, you discard it and focus on something different. That is why I didn't want to extend this line beyond here. It has done its work. Look at the structure, a double top structure, and we have an inclined ascending trend line. The trend angle is the same at the moment in the current price action. Look at the double top. After break of the double top, this is the neckline. Break of the neckline, retest 1, retest 2, which I'm call it RT1, RT2. Come on. So these are the two retests to the broken neckline of that double top structure. And if you have wondered why price stopped at this level, the reason is not far-fetched. They are the same level. So the market reacted on that supply roof. The price action here from December 2021. There is a break of structure here. If you look here, you see a weekly candle rejection, rejecting body close. And the next week candle came, broke after the week, and came back and retested it. That is break of structure, and that becomes an RT. That's a retest candle to a broken demand floor. Besides, you've seen the weekly candle rejection here. You can see the weekly candle rejection. Look at that candle strip. Look at that candle strip. And look at exactly. This is where the demand lies. And this is where the break of structure comes to start. And that was why when price came back, it retested it. It came back and confirmed it. And the subsequent week fell under the influence of a bearish impulse. So sometimes the validation of my strategy is based on back trading. Having back traded almost all the pairs in the financial market, I came to a conclusion and stick to a strategy. It's a little bit orthodox, a little bit orthodox, but if you know it, you know it. And this is complete price action, no indicator, no indicator. So the next thing now is I expect Sol to buy from where it is, but when you look at what the market has done, you see this break of structure at this level and a retest into 187 in the month of May, it sends a strong bearish pressure. And considering the impact on this floor, having seen price here as SR in 2021, break of structure, retest 1, retest 2, break of structure, retest 1, retest 2, 3, 4, 5, break of structure, retest, break of structure, price came back here. If Sol does not rally and move away from here, then return back to this base, possibly with the intention to break the structure. What I want Sol to do is to return at this level if it still wants to trade. But you see, if it gets to that level and it fails to break it, then Sol should come down directly. Directly, it should come here and stop wasting our time on this floor. This is an ascending trend line has been leveraging on. It's a demand floor. So I do like a situation whereby Sol stops and return back. A push back into 91 will reinforce a bearish pressure. And that bearish pressure reinforcement will further trigger sell. And if we have a triggered sell, most likely it's because we have a clean price action at this level. I will clone that structure and look for the next available demand floor. This is where Sol will come to. So a break away from here will ultimately return Sol into 65, a decent entry for those who are desirous of being the Solana gang. So you could leverage on this structure on a sincere fallout from here, leveraging on the trend angle and leveraging on the next level of demand. If we have a fallout from there, then this is where I want to be. I don't want to be in that first layer. It has been tested before. You're looking for a fresh zone that has not been tested. That is what you're looking for as a trader. The last time this structure was tested was here. After break of structure, it was in January 2024. Allow price to come back to 2024 demand floor on a descending trend line, DTL. This is by far the most advanced Solana chart you will get for free. I'm telling you, the most advanced Solana chart. It's quite explanatory, without so much grammar, without fair value gaps, area of mitigation, area of imbalance. All those things are trash for me. I don't use any of those things because you do what you know you can and what you understand. And what I'm telling you is what will happen. So where you should wait for price here around 65.58. It is based on the structure of the market. And let me throw more light into it so that if you are in doubt, come to the comment section and tell me. Here is an ROS level, a break of structure, followed by a retest.
The retail retest at that level. And that structure was got by cloning the first layer resistance structure. So we clone it and brought it to the next resistance. The angle of trend is the same. And when price came here, because it peaked liquidity due to accumulation of um, cash on the bottom floor, and when it broke the structure, it came back here to retest it, making here a demand floor, which is an SR. Allow price to return here for a buy. And some of the things that you can leverage and buttress on is on a horizontal structure, we have a demand floor here, indicating that 63.2 could be the next area you are waiting for. And when you look critically, you will see a strong weak candle rejection here. Let me be very specific with dates and time. You can see that candle over there. Yes, that's the time. So let me take it out. It's blocking the price action. So I'm going to circle it so that there is a strong demand at that level. There is a strong demand at this level. 59.59. 59.59 into 63. And if that comes, that will come on a double confluence coinciding with the descending trend line and the horizontal trend line. Both of them will provide the impetus that you need for a buy opportunity. So the price action is very clear. It provided the first floor here by that weak rejection, creating a demand floor, break of that demand floor, turn it to a supply roof sell. When price came back, broke that structure, it turned it to a demand, and you have seen this is the beginning of the rally. A lot of traders who leverage on this particular price action in Monday 09 May 2022. Let me put it for reference. This is the beginning of this rally. Once price broke away from that demand floor, it signaled the presence of liquidity, and SOL did not hesitate. If price returns here becomes area of cluster, 61.48 into 59.59 demand. Buy.
So I'm dropping a SOL buy idea. 59.59, go long. 61.48. You see, SOL is a liquidity crypto pair. It can move in a very tremendous way. So put a sell order, put a buy order there. The time it will trigger, honestly, you are sleeping. You might not be awake when this thing will happen. You might be doing something else, and that trigger will happen. That is SOL. Because I've been studying it. I've been taking time off, study everything in the market so that I will have better insight into how they move. The most important thing is knowing price movement. Price movement is different from strategy. Price movement is like itinerary of someone. You want to conduct something on someone. You monitor how the person moves, where he goes to, where he eats, where he always hang out, people he hang out with. Is he a club person? These are so you look at price movement. How is he moving? So these are things that we must look out for SOL, and you see from here, if you look at the current high we have here, a plot down into this area, you will see a clean break of structure followed by a retest, and this is a double top structure. After that double top structure, you have seen the breakout, the neckline retest one, second retest two. So this could likely be coming down from what SOL is doing, except they move on to reverse it and invalidate this structure. To invalidate this structure, price needs to return here. If it returns here, invalidate all bearish analysis by switching it from downtrend to uptrend. So it has to be proven. That is the thing about market. Market has to prove itself. Here it caps here as a supply roof. It caps here as a supply roof. And after break of structure, what happened? It returned here as a demand floor. Right? And after break of demand floor, what is here? Supply roof 1, supply roof 2. So I'm going to call it ROT1, ROT2. ROT1. So the market is very simple. Very, very simple. So that's SOL for you. To set your buy order 59.